Hello and welcome to another edition of Property Matters. Today I'm joined by Leo Dan. Leo is a mortgage broker.
Hello, I'm Mark.
Hi, you can introduce yourself and just a little bit about what you do and your company.
Yeah, my name's Leo Dan. As Mark said, I've been working in financial services since about 2005, secured lending since 2005, and specifically in first charge mortgages coming on for 8 years now, the last 8 years, and self-employed doing my own thing for the last 6 years. So we offer independent whole of market mortgage advice with access to every lender, whether you're a first time buyer or an experienced landlord. We have the service and the solution to suit both. So thank you. And that's a bit about what we do and how we do it.
Okay, so let's talk a little bit about what's going on out there at the moment with the pandemic right now. What have you noticed yourself, and what are you experiencing from the lenders during this period of time?
Prior to the pandemic starting, for a typical first-time buyer who may have a 10% deposit, they could get a mortgage from a high street bank and fix that mortgage for a couple of years with a 10% deposit and pay a rate of in and around 2%, ranging from 1.9 to just over 2% from the top lenders. As soon as the pandemic started and the economy started to struggle as a result, the first thing that lenders stopped doing was lending people up to 90% mortgages with a 10% deposit. So the first thing they did is strip that away, most of them, the majority. And for a while, you had to have a 15% deposit at a much higher rate of interest as well. So you could get your mortgage, 15% deposit, and rates went up to easily 3+%. Now, as time has gone on and the economy is clearly going to survive this pandemic, lenders have started to relax their views a little bit more, and they're now offering 90% mortgages again, but the rates are much higher than they were, easily 1% plus, in some cases 1.5% more than they were at the higher end of loan to values. And that's because there's risk in the economy, greater risk to jobs, greater risk to property prices. The stamp duty has spurred on the market, and lenders are nervous that what will happen to the property market and obviously people's jobs once the stamp duty and furlough and all these government-backed incentives have been taken away, and government-backed measures. So that's been the main change. But what I am seeing is gradually lenders are becoming more and more relaxed. They're introducing more 90% deals. Another thing is 95% was available. You could get a mortgage with 5% prior to the pandemic with a rate close to 3%. 95% mortgages are not currently available anywhere, as far as I'm aware. So that's been the main change, but gradually it's easing up, and gradually the cost of these higher loan to value mortgages are starting to come down.
So if you were a first time buyer, now somebody came to you, is anything to chat, like just talk me through the application process of what they're going to need?
The process is the same in that they obviously need to make sure they've got a deposit at the moment, currently 10%. That can be, for example, savings, a gift from family. Often I see first-time buyers where family do want to help them out with a deposit. That's pretty normal. But the main thing is they need to have what I call all their ducks in a row. They need to have 3 months bank statements. If they're employed, they need to have 3 months pay slips, identification, and we need to be able to understand where their deposit is coming from. If they're self-employed, depending on whether they are a sole trader or a company director, there'll be some different documents. But typically an SA 302 or tax calculation covering at least 2 years, 2 financial years, is required in addition to the bank statements, ID, and the deposit. The process for first-time buyers is largely the same, whether you're regardless, and actually it's no different to them other than they're paying more, sadly, on the rates, on the interest side of things. And that's a frustration. But apart from that, it's pretty much the same.
What I'm finding right now, doing viewings is it now more than ever. It's so important for buyers to get themselves an agreement in principle or have a chat with a broker before they go out doing viewings.
Absolutely.
You know, it just I think just to be safe. And I don't mean safe necessarily from a financial point of view, although that is the case. But, you know, people are going into people's properties. They need to be really, really there in a position to be able to buy and make a decision straight away.
They need to be serious. They need to be able to proceed. And whilst I personally advise my clients not to provide decision in principle until an offer has been agreed, because often the decision in principle demonstrates how much they can afford. And, you know, so whilst I agree 100% on what you're saying, before they're going to view properties, they need to know they can get a mortgage. Otherwise, they're wasting everyone's time. So I completely agree and echo that.
Yeah. Okay. That's good. I mean, are lenders doing anything different? I mean, you did mention it a bit earlier on anyway, about the potential insecurity. Well, there is an insecurity, not potential, the insecurity of people's jobs right now. So, I mean, are you speaking to lenders and they're sort of giving you any indication of what's happening as far as that goes?
Yes, they are. And I mean, obviously, the increase in interest rates is negating risk from their perspective, especially for the people that are smaller deposits, which is not great. That will come down in time. But every lender is conducting extra checks at the moment. Every lender. All right. Mortgage applications are taking longer because, firstly, lenders typically do operate in call center style environments, you know, where there's a volume of people sitting close by processing applications. So the first thing is they cannot operate as normal. So it's taking longer. The second thing is they're conducting extra checks, whether you're employed, self-employed, directors. They want to know if you have been impacted in any way by COVID. Have you been furloughed? Have you taken bounce back loans? Have you taken grants? Cash flow of your business. If you're employed, again, are you employed? Have you been furloughed? That kind of thing. So there are additional hoops to jump through and additional hurdles to overcome. But nevertheless, there is an appetite for lenders to lend as long as you have not been significantly impacted by COVID.
Do you know that really now is it makes so much sense. It's like that's the chain of events that's happening, because the amount of people that are viewing properties has really, it's slashed by so many. Probably a quarter of people are now viewing. However, the ones that are viewing are confident because they've had these conversations with their broker. They now know that they are the lucky few that actually can buy.
Absolutely.
And they're ready to make decisions very quickly. I mean, I've been putting out these videos over the last few weeks. So I'm doing a fraction of viewings. Time management is amazing right now. Fraction of the amount of viewings, and I'm getting the offers. So it's actually, it works good for everyone. But no, okay, that's fine. So during 2021, I mean, it's like the big crystal ball question, isn't it? Do we know? I mean, what's your view on what's going to happen this year?
Well, I'm going to give you my view on property prices personally. I mean, that, you know, if I can, because I do think everything's linked. Yeah. I don't think we're in for a significant crash at all. I don't think that's going to happen.
Right.
You know? A wobble maybe, a crash definitely not. You know, and it really all rests on what happens with stamp duty, which we're all speculating on at the moment. And I think, you know, the property market, whilst I'm not an estate agent, I see it from the other side, you know, sales and everything going through. So I don't think we're in for any crash. There may be a wobble if stamp duty does end come March, you know, a natural decline in sort of inquiries and people active in the marketplace, but that will, on a knock-on effect, lower prices a little bit because they have been inflated a bit due to the stamp duty. And then it will just bring out people who are serious, as you said, Mark, you know, people that are in the market to buy and not just window shop, as you've put it, and I do think lenders, as they see the economy starting to recover and this lockdown comes to an end and restaurants can open and all these businesses can start to go back to where they were, I do think the economy will bounce back. And I think lenders will start to loosen their view, relax their view, and rates at the higher loan to value banding will start to come down, so I don't think we're in for a bad time. I think we're in for an uncertain time. I don't think it's going to end up causing long lasting damage, but then everyone has a different view on these things. I don't know what you think.
I completely agree. So as far as the stamp duty extension goes, hopefully we're going to find out very soon. I've been doing my voting anyway, as a member of the National Association of Estate Agents and Property Mark. I've been lobbying through the proper channels and signed the petition. I got a good feeling about it. My personal thoughts is that when the stamp duty holiday was announced, we weren't in a lockdown. And we didn't think at that stage that it was going to get any worse. So therefore, and it was literally only probably about weeks after it was announced that we then went into the beginning of December and the tiers system and then this final lockdown. So it hasn't, and therefore what you're getting is you're still getting lots of people that are still too nervous to go out and view properties. So that is still there, even though the viewing numbers are lessened. There's still enough good buyers out there that if we weren't in lockdown would be going out and viewing properties.
Absolutely. So
you have to sort of look at it like that. So I'm confident that it will be extended, which will be great. I also feel that it will be a wobble rather than a crash. And you know what? It's funny. So this is just life in general. And I think, property mirrors life. And what happens in life is we have bad times, but actually the bad times are generally quite small in comparison to the good times. Otherwise we would just be depressed the whole time. And what happens is that, but we focus on those bad times, and especially when we're in it, we really focus on it. But it lasts for a period of time, and then it's good for ages, and that's fine. And then it happens again. So it's the same with property. That if you buy something now that you're intending on staying in for a couple of years, even if there's a wobble, you're not going to be affected by it, because it is literally going to be a period of a few months. Maybe 6 months, maybe the worst case scenario, 10 months, but it's not going to be a crash. There's not going to be a huge slash of prices just tumbling. And that's because demand is there. The demand, it's people power, isn't it?
Yes, and the demand is there. And I agree with everything you've just said. The stats show when there have been wobbles or crashes, a bit like in life, when we have difficult periods of life and it's all down and negative, we tend to get through that and come back stronger. The property market is the same. As you said, it's an interesting correlation, actually. So, yes, I completely agree with those sentiments. Exactly.
So thanks very much for that, Leo. I found that really interesting and informative. A nice, quick little chat, and we can do more of these going forward. If someone wants to get in contact with you, what will they do?
The best thing to do is phone me. I mean, if I've never spoken to you before and I don't know you, give me a call at your convenience. I'm very much available on the phone. If I don't answer, it's because I'm on the phone already, and I'll call back that day. But do give me a call. For anyone who just wants to have a chat about mortgage advice and their finances and see how I can help you and help you buy your next home or save you money on your mortgage. With pleasure.
Lovely. All right. Well, listen, thank you very much indeed. All right. And look forward to catching up soon.
Thank you. Thank you.
All right, take care.